Good evening, guys. This is Ken at Tortoise Capital with an update of the strategy report for Wednesday, February 26, 2020. I thought I would do a 2-day follow-up to Monday's hour-long session. As you may recall, Monday I described as the first shot across the bow and laid out a number of strategies for the market, for indices, for specific stocks, long and short, and we did a speed run of the swing portfolio and had some anticipations of what different support and resistance levels could look like and different strategies for approaching it. The follow-through Tuesday and Wednesday followed along those lines pretty well. I felt like the strategy report gave us some actionable information, so I wanted to just do a follow-up and then go through the daily report and a speed run on the swing portfolio, just so you can see the follow-through on the variety of different symbols. So just as a reminder, tortoisecapital.net has the information on boot camps and playlists and some freebies, syllabuses for the day and swing trading course, and some good giveaways, and the discussion of the summer annual live trading and research weekend that we're going to do. I had an interesting discussion with a pro trader from Singapore. We're going to take a look at extending the TC2000 bundle for institutional investors and money managers. So that's going to take some coding and some work. I'll keep you posted on what happens there. It's going to use the TC2000 as the basis for hedge funds and RIAs to work global strategies with. We're pretty happy with the results so far. Good news from Danny is that his business is coming right along now. The TC2000 bundle has helped him go to the next level in his money management career, and so we're just really proud of the work he's done, and best wishes to Danny for continued success. Let's use him while we got him, folks, and get a hold of that TC2000 bundle. It automates everything that I do and makes you self-reliant, in my opinion. So word to the wise on that one. So let's go ahead and shift over to let's see, I guess from the chat room today, I just want to show today was pretty busy this morning. So when we go to the Tortoise Campfire now.com, that gets us to the chat room and the primary and intraday mastermind. The files and transcripts gives you the access to the threaded discussions, and asynchronously allows you to look at the things we're doing offline or on your own time frame. When we looked at the trade this morning, early in the morning, was a lot of activity on my part, so I could only post a few notes. SPCE, that Virgin Galactic, was collapsing nicely, so I was getting short on that one. And then there was a reversal in the morning that looked really good. We'll see that when we look at the sequences. This is my current thinking on virus, the coronavirus, and the human race. I think humans are smarter than a virus, but if you're going to bet, if you bet on the human and lose, it doesn't matter because everybody's dead and money doesn't matter. If you bet on the virus to win and you win, it also doesn't matter. It's the same trade, and it doesn't matter because we're all dead and there's nothing to spend it on. So if you bet human and win, then ask yourself, did you get good odds? And then that tells you how much you're going to win and your time frame. So just thinking out loud. By 10:30 Central Time, the reversals in SPCE and the UDOW paid off nicely, and so we were able to get SPCE at 31.60 and cash it at 34 for a 10% gain later that day. And then UDOW we got at 108, we were able to sell for 109.5. And those little tactical intraday opportunities on rising lows and rising dragons turned out to be nice, and so I'll show that when we get to it. Yeah, and then later in the afternoon, it was the stop and reversals on both of those. So the DIA collapse and the SPCE collapse paid off twice as much in the other direction, and that led me to realized I needed to do another strategy update today. So let's shift to... I guess I want to do the... we'll do the strategy reviews first, okay? Let's see if I can get this posted. Stand by. So this was today. I'm not. So this was DIA gapped up, bought the VWAP crossover, cashed for a leg, re-entered on the failure to collapse back to fair value, cashed a win. Bought the higher low again, scratched, stopped and reversed because now we have lower highs and crossing the VWAP, a collapsing dragon, short, second position short after this collapses again, second one short by the RLXD, so that's a nice win. This now gives us a series of cascading lows and collapsing dragons, short, second position short on this collapse, cashing, so a really nice play in DIA. Now, these are being executed in UDOW on the long side, that's the triple leveraged DIA, and then SDOW for the inverse, so that's the way I'm playing that one. Here was SPCE. This was the morning move, long at 31.60-ish in here, and then selling around 34, and then a series of cascading, collapsing dragon short, starting at 33, and then cashing everything around 29.50. So short at 33, at 32, at 31, and then cashing at 29.5. So nice win, and then cash overnight in that one. Brazil. First one was a short and then a scratch, then a collapsing dragon here for a nice win on the RLXD, another scratch, tried the second short and scratched it even, then a collapsing dragon short, and cover, so nice wins in EWZ. Here was today's Four Seasons and the MACD histogram. You'll see that in the daily here in a minute. The daily market health check. This is for today. You can see the 1 day, the 10-day range, the 30-day range. So the 1 day range closed extremely weakly, and that made a new 10-day and a 30-day low. The 10% sell-off is here. The MACD histogram is right in the edge of fall, getting ready to collapse into the winter, so that if this collapses again, it's auto short, and then it's 306 and 304, and then all the way down to 300. Just a quick summary for those of you that are setting up your charts at home. I'll let you just take a snapshot of the different parameters and the different indicators and the colors that we use, and then what they mean or how we interpreted that, just as a learning tool. So this is looking at, this is Tuesday's follow through. The last one I gave you was today, but this was the big move down after Monday night's strategy session. So EWW was a four-bagger, short on a hybrid frog, collapsing dragon follow through, Z3 breakdown for third position, second dragon, collapsing dragon for the fourth position down, and then just to cover, I just couldn't take it anymore and had the RLXD, so that was huge. Big win. Brazil had basically the same thing, hybrid frog initially, collapsing dragon, and everything was just failing on Tuesday, so that was a big win. And we had highlighted those in the strategy report as being among the weaker ones. So this is the ultra short crude oil. So this gets better when oil is collapsing, and the whole energy market was collapsing on, I think, global slowdown. So this got us a hybrid frog, emerging dragon, cash a 3 position, re-entry, fractional loss, scratch, C3 breakout, big win. Nice. Tesla, collapse on a hybrid frog, collapsing dragon, and a Z3 pinch breakdown. Cover, stop and reverse, or essentially re-entry, and then a single scoop. Nice. You know, that's going short from 845, essentially covering down around 800. So that's a 5% move from here to there on Tuesday. Devon Energy was, along with weakness in energy that we already saw, Hybrid Frog, second scoop, cover, scratch, four baggers, cover. The energy sector was a big payoff on Tuesday. That was the close of the market on Tuesday, and then today just got worse. Yeah, so that's everything I wanted to cover on the 2-day follow-throughs on specific ways I was implementing that price breakdown. I want to go to the, let's do a speed run on the swing portfolios. We'll just start up here with Alcoa. Alcoa, let's get this going. Hold on a second, I gotta turn off the slideshow. Sorry about that. Okay, so these are all daily charts and 3-month lookbacks. So Alcoa was a fractional loss, then stop and reverse yesterday. Should have second position in, but I ran out of capital. So Alcoa is short and tracking. I'm going to move my stop down to here and lock that in. And then I'll add another short position if it collapses. Apple, I didn't play the breakdown, and there were just other things that were better. So I'm on the side in Apple. I stuck around 1 day extra in ARC, and then when Tesla collapsed, I ended up just about scratching. Gave back way too much on this, but there you are. Aussie dollar, now we're 2 scoops short and in great shape. Boeing, we had a long and cashed, and then short on the RLXD and the break of the 200. Second position yesterday. I'm going to move my stop down to here and lock in 2 scoops of gains. Caterpillar, we're now 2 scoops short. I'm going to move my stop down to here and lock it in. Cliff, this is nice. I'm going to move my stop down to here, lock in the second one. I'm going to add a third position if that breaks. You're going to see why when we look at U.S. Steel, the entire material sector. Timber, got the second position short yesterday. I'm going to add a fourth position if it breaks down again. And my stop is going to be right to here now. So tight stop. Devon Energy, 3 scoops short. Going to move the stop down to no lose plus dinner for 2 on the third position short. That's just a big win right there. That's like 15% gains in 3 days. Emerging markets, I took the loss today. Yesterday was white knuckling. It was such a huge sell-off that I stayed with it, but then today it gapped up and started going up. I couldn't take it any longer, even though it rolled back. I just covered the and took the loss on that short. There were other things making money. EFA, I'm only 1 position short. My stop is here. I'm going to add a second position here if it breaks down below the swing low. Japan, we're short 1. It showed some recovery today, so I moved my stop down to here. We'll just see how that one goes. This is Mexico. I had covered this one, and I have not gotten re-short, but I will get short again if it goes below. That's right. If it makes a new swing low. So we'll start that one with a hybrid frog and then get going. The better short in that pair was Brazil. So we're 4 swing positions short, paid for by markets money. Going to move the stop down to here now. I'll add a 5th one. I'll add a 5th one if it falls below today's low. Home Depot, we basically scratched that long. I didn't take a short because it was the strongest one in the Dow, so making it in other ways. I've just been watching the Russell, had better things to short, although you wouldn't be sad if you were short there. Even the real estate, which we cashed that 3-bagger here, the 3 scoops, and took a fractional here, protected that entire move by this early exit. I think, man, I want to be in it because of defensive plays, but if it breaks below there, I think I got to get short again. There's just no safety in any equities right now. Coal, we're short one. It's just grinding down. There's better positions on the short side in energy, but it's just grinding down, so I like it. Took the loss yesterday in McDonald's. We cashed that gain. I've just been watching. There's other things that are better positioned. SCO was that inverse crude oil, leveraged crude oil. So we're long one, and I've got to move my stop up now up into here. So we're in pretty good shape on that one. Where would I add another position? Let's see. I think if it breaks out above here. This one was a stop. We'd got short and covered, stopped and reversed, and now we're still good shape. Add a second position there. S-Dow, you saw the intraday trades on that one already. SPCE is the Virgin Galactic. I'm only trading that intraday now because of the volatility. SPG, that's Simon Property Group, got short one here, added a second one here, so now our position's in pretty good shape. And closed weekly. I guess we should add another position if it breaks down. Should have had another one in here when it broke the original PSAR flip and the RL10, but it's a pretty busy day today, so we'll take the excuse. So we'll add a third position there. Let's see. Treasuries, great shape. We got 3 positions long. I moved my stop up to here because I didn't like that little give back today. So we're going to move our stop up to here to lock in the gains on the first 2, but that should be good on the defensive plays. Tesla, the long, we took the basically a scratch yesterday, and this thing is just it's vulnerable. Natural gas, nothing, just watching. There's other places that are better to be in energy, like oil. Now we took this loss and are now short one, and we've locked in some gains, so this is going to offset that loss. So I feel all right there. VIX, I cashed this one today, all right, so sue me. We were long one from 14, then 15, then 17, and then 1880, and so we just cashed it today at whatever that is, around 1936. I just felt like with that Z3 excursion twice and then closed back inside, I just wanted to take that at the Z3 line, lock in those gains. Some plunge protection team is about due, and so I was worried about an overnight gap to the other side, so I wanted to make hay while the sun is shining. Wiz, and this is what Bob Rourke calls is the end period look back problem, and that is when you use a fixed look back period to do your rebalancing like Wiz does at the end of the month. Those intra-month signals just crush it. It always looks good in retrospect and back testing, but the pain that you suffer during is just brutal. So we got long here and then just said right here that we had seen enough on the when price came through and touched the PSAR and bounced a little bit. We just took that exit to cover. And so getting out at 28-ish, 27 versus owning it at 26 when it has clearly collapsed and has given back, 40 days worth of gains the hard way in 3 days. It sucked all the joy out of it. So I just think the monthly rebalancing on that just can't stand contact with the real world. So I still like their methodology. I just think their money management leaves a little bit to be desired. Walmart, we took the scratch. I've been reluctant to short one of the stronger segments in the Dow. I'd rather just be short the Dow than try to stock pick at this point. But when even Walmart and McDonald's are suffering, it's not so good for the Dow. So we had 4 positions in Wheaton. I took the exit here yesterday. It had a gap down and closed pretty well, but it's had 2 days of sideways. So I feel like making bank on those 4 swing positions here was good, even though we gave back $1.50. I like that we get a good defensive play, and that allowed us to raise some cash. Win, we're short 2. Going to add another one if this breaks down below, and a fourth one down here. U.S. Steel, that short that we just held the longest time there, paid off yesterday and today, so now we got 3 in, and this was the basis for that cliff short. Materials themselves have collapsed. So U.S. Steel is actually holding up much better than XLB, and so the weakness in XLB, this was a stop and reverse. So we took the loss on this one, got short, and then 2 more positions, and I've tightened up my stop to here, and I will add an additional position if that breaks down. Energy, just suffering, so we're short 1, move the stop to here, add another short if it breaks down below today's low with a hybrid frog. XLF I just missed because I've been playing energy and XLB, but if anything, that's the one. You know what I mean? That's just the one. Notice the value of the RLXD exit here to take a fractional win. That feels pretty good when you're looking at a price around 28.50. I guess we got to go hybrid frog on that one if you were going to restart it from scratch. Technology had a little bit of a bump today, so I'm now gonna move my stop down to here so we can. As you were, this was just a fractional loss. I'm not short those guys. That was the strongest sector, so I'm short B and E, but not F and K, if I may say it that way. So there we are. I wouldn't get short tech now. If there's any rebound, that's where it'll be, as people are buying quality on sale. So now let's just do a quick speed run on the daily. Oops. Let's see if we can't get that going. And let's get our daily report over here, if we can. Okay, so the all the ideas come out of the blue. I'm not going to cover these things in the white. Those are that next layer of detail. And we spent some time on those in the strategy report, but really that's just where I go for the deep dive. The actionable ideas come out of the first 10 pages or so. Health check I already discussed. Big collapses in all the look-back periods, still bullish volatile. Overreaction and channeling or firing on the long side on the U.S. That's how strong it had been. Notice the value of that going from spring to winter. When it rejected the 0 line, that gave us all the warning we needed for this volatility spike down. So this is clearly short-term trader time, and that's where I'm exploring. So these are the min pains are the ones that are holding up best. Max pains are the ones that suffer. The predominance of healthcare inside there, and the triple Dow short and energy. Everything is on an auto frame or sell. Tons of channeling and overreactions, but the key ones to notice are the RSI2, the big breakdown collapses. Start with the indexes first, and then the energy and finance sectors and materials to get short on those. You can really see it clearly here in the tactical summary. Everything has suffered the most. The Dow is the biggest sufferer there among the U.S. indices. See the big breakdowns again in IWM, oil, energy. That's where you play. Treasuries and gold were the strength. This is why I didn't get short Home Depot, because it's actually the best of the Dow right now, and along with McDonald's and Walmart. So when that thing reverses, that's the place to start looking. But then you can see the negative Z stretches and all the collapses. These are the ones that have suffered the most. Chevron, American Express, Energy, Brazil, Diamonds, EFA. That's the place to be. Among the U.S. indices, really the small caps have held up the best on a Z-score basis, but everything is down almost 2 sigma or more. That's the magnitude of the sell-off. No super pinches available. Lots of mechanical trade frames there on the auto framer. If you're tempted on the long side, I still think it's premature right now. There were no stretches. Everything in the fall and the winter in the Dow, and then only a handful of things that are in the spring and summer. These are all those defensive plays. Then the summary of the MACD histogram. It's just more of the same. The speed run should help you zero in to which things you like better. Still big breakdowns over the last 3 days. And then these are the ones holding up the best because this is sorted by the 10-day NDX. Microsoft, Pfizer, Apple, 3M. And then all the defensive plays, Treasuries, gold, silver. Japan is actually doing fairly well. You saw that in the speed run as well. Second, it tried a little bump up today, failed. Didn't really collapse further, so I'm expecting another test to the upside. So I think there's some intraday moves that are reasonable. Notice all the stretch gave back. That is a 1, 2, 3, 3.5 sigma move with respect to previous grinding moves up, all lost in the last 3 days. The slope of the RL30 collapsing. Now we're down below the long-term average and into the negative side. So we're an inch away from getting into winter moves. The volatility price standard deviation in the last 30 days is more than 2 sigma to the upside. That's how violent that has been. Deeply into bullish volatile here. We're getting close to go sideways volatile, and then all hell will break loose. 3 declining highs in the slope stat. That's why you pay attention to that. And then the declining lows, we had plenty of opportunities to be warned. And then when it crosses its own 10-period moving average, that tells you that's the end of the move, and that protected us on Monday and it allowed us to exploit Tuesday and Wednesday. The 10-day slope stat is a 5 sigma adverse move. That's unusual behavior. So it's come all the way back to the previously mentioned support levels. The next one is about 295 to hold. So 300 and then 295 is the next test. Right now, the 1-day sell-off today was only a half a sigma. The 5-day sell-off is a 3.5 sigma. 10-day sell-off of minus 7% is a 3 sigma. 2 sigma, and an almost a 2 sigma over a 40-day holding period. That's how bad the loss compared to where it was 40 days ago has been. I mean, it's down 6% to where it was 40 days ago, and that's a 2 sigma adverse move. So you can see the size of adverse moves in terms of sigma and then percentage basis. So there we are. And everything else is kind of details. I'll just flip through it and you'll see it. The charts are posted at Patreon and on the distribution. The prices on the Patreon subscriptions are going up as warned on 1 March. Here's the deal, though. If you are signed up on the $1 or $2 one and you're in the sound of my voice, that's not going to be available to people in the future, but if you want to stay there, you can. I would invite you to upgrade to the $10 a month if you like the daily and weekly reports. I think that's fair value. And we'll continue to try to add value to the other subscription levels as well. We've added the coffee talk once a week, and then the longer-term opportunities for position traders on the weekend coffee talk. So I'm hoping you'll continue to support my work as you guys have graciously done in the past. As I start shifting to some other institutional support work, I've got to value that time. And the Patreon subscription prices will change accordingly. But again, if you're already in the $1 or $2 a month for the dojo or just the weekly reports, you can still access that. But in the future, that's not going to be available to guys in the future. So thank you for being early adopters, and I really appreciate your continued support. Keep your risk measured and your powder dry. I have an opportunity for some questions if you have them. Otherwise, you can send me email questions. And I will get this video posted for later replay and get that hung on the Patreon distribution and in the chat room as well. So if no questions... Oh, wait a minute. I'm sorry. Here's a couple. Thanks, Luke. Appreciate the commentary. Yeah, Luke asked... Samir asked me, you... heard me say auto short in some videos. Well, here's what I mean by that. It's an automatic decision. It's an automatic decision for me to go short if yesterday's low collapses in this kind of a sell-off. So let me call one up to show you what I mean. And it's nothing more than... So, like, I'll use... heck, I'll just use XLK as an example if I had been short. So in the middle of this kind of a sell-off, when it already broke through the RL270, if I say auto short, what I mean is I'm going to put an order to go short in the market here, or if I see it gap up and now it's selling off intraday, as you notice here, as it falls through that red line, I'm just going to automatically get short here by decision. Like, I'm not going to spend any extra time thinking about it. I'm just going to get auto short there. By the same token, if I was going to auto short XLK, I would have had my stop here. Now, it never got to there, but because I'm going to auto short it tomorrow, if XLK gets below 91.94 on price action, I'm not going to spend any extra time thinking about it. I'm just going to get short. An easier one to see is XLE. This is even easier to see. So in this case, I'm already short one from here. Where I should have gotten short a second time was here on the blue line today, but I was trading intraday, so I didn't. But I'm going to get short on a swing trade if it goes below 47. I'm going to call it 47.75. So without any extra thought, I'm just going to go ahead and get short. That's what I mean by auto short, automatic short. So I've already made my decision that if it goes below that level, and that's normally on a breakdown of like a belly of the dragon or the belly of the RL10 when it rolls over, or a PSAR flip, or in this case, a 1-day low or a 10-day low or a 30-day low. Those collapses are just automatically getting short for me. Okay, so that's what I mean by auto short. So, are there any other questions, fellas? Samir, did that answer your question? Okay, cool. Any other questions, guys? Just keep sending me by email or post them on the chat room, and I will answer them as fast as I can. So thanks so much for your kind attention and the continued support. It really makes a difference for me, knowing that the work is valued and that it's doing some good. So I appreciate all your kind words. Let's keep our risk measured and our powder dry.